Welcome back to Your Property Empire. It's time to take a look now at the latest property statistics from across the country. Charles, tell us what's been happening in the last week, particularly national auction clearance rates.
Okay,
perhaps.
but can I ask you a question? Where's Chris? I mean, we've had 2 weeks in a row. He's not turned up, and Tom and I are working so hard for him. He just never turns up. He never says anything. Doesn't apologise to you or me.
We're busting our guts.
I know.
Chris, I don't know where you are.
You're doing a great job.
Do you know where he is? Is he on holidays again somewhere?
He's apparently in Vietnam.
Ah, yeah, he's on holidays.
So,
the property numbers...
he's allowed a break once in a while, though.
He's always having a break. The property numbers, especially the auction arena. Now, Sydney hit a 79.1. That was the star of the show. So we had a great result there. Melbourne was at 62.8. Not a bad result. You've got to remember, I guess, at the end of the day, we're in winter. We're in the middle of winter. And this is traditionally the slowest time. And when I look back over last year, the figure on average across the country was 52.4. This year it's 65.4, so
really?
we're up still on this time last year. And Adelaide City had a 51.1% auction clearance, and they've been in the 50s for the last 3 weeks as well. So across the country, when you consider winter and you consider the normal capital cities, Sydney and Melbourne, being high in clearance, you've got these other capital cities that are also doing very well. So, and I'm sure you're seeing it, Tom. You do hundreds of auctions every year.
Yeah, Charles, I've got to say that this is as hot as I've seen it. I mean, and I'm biased because I work in marketplaces where auctions are the way it's done, you know, and you know that I'm not indicative of all of Australia. But I would say, Liz, that this is as hot as I've seen the real estate market in 10 years.
Really?
Yeah, there's a lot of people.
There is a tremendous amount of interest, but it's still going back, and we've got to qualify that again because of that question we were asked from somebody from Tasmania.
Yes.
That it is in certain pockets, and I know I just came from Perth and Melbourne. I just did the circuit seeing the C21 guys, and in Perth they're absolutely screaming for stock in most of the suburbs around Perth city itself. From Mandurah up to the north, they're screaming for stock. And in Melbourne as well, in certain parts, there's an oversupply in parts of Melbourne in apartments that came through, and some land in outlying areas because the government released a lot of land. But in the mainstream, the results are very strong in that capital city as well. And of course Sydney, with the 79.1% that I'm showing on my charts, it is, again, it's city-based, so we've got to be really careful. Some of the outlying areas don't get such a great result, but your Newcastle area, Central Coast areas, they're strong. So the cities are still doing very, very well.
I was in Darwin on Monday and Tuesday, and
working. Not like Chris, working.
The situation there is that we're getting less print revenue because properties are being sold in 5 or 6 days. We don't even have time to have the properties published in the newspaper.
Wow.
They're just going like hotcakes. But then we do have other areas where, like certain parts of Adelaide, Charles, the days on market, they're nowhere near as attractive.
No, but Adelaide's the only capital city, really, from all this data I've got, that's got as much stock to meet the immigration and population growth, whereas other capital cities aren't in that position. So they're a bit more balanced, but the market's still pretty good. I like Adelaide City, and I also like Melbourne City at the moment. So.
Okay. All right, let's move on to homes advertised for sale.
They're a negative 0.6. Now that's been 3 weeks in a row it's been negative, and we're at 17.57%. lower in stock than we were this time last year. So we've got this drop in stock, but this massive amount of activity. So that's why you're getting that push at auctions where there's a good property around. There are more and more people turning up to bid for those properties.
Okay. Interesting. Residential rent price movements.
Yeah, Sydney,
up or down there?
Sydney's okay. Sydney's been sort of hovering, and it's sitting at 10.68% increase over this time in January. I've been charting it since January. It was up at 11. It started to drop back a little bit. Melbourne's sitting at 6.94%. Now that particular figure has been in the sixes for a few weeks, but the surprise this week is Perth. We always thought that might flatten out, and it has been flat for a while, but it's now peaked at 17.02% since January last year. And so when you take all of those areas into consideration, all 3 capital cities, we're sitting at 11.58% as an increase. Now that figure has been flat for a while. It hasn't been climbing. So when you grab the 3 together, we're still not booming out there, and I suspect it won't.
All right, and finally, residential vacancy
Yeah,
rates.
Sydney was a hard one. Sydney was at 3.71%, so that's up there for a few weeks now. And then you get into Melbourne, that was at 2.17%, and Perth was at 2.86%. So the overall total of those three capital cities is 2.92%. We're still now starting to hover around the threes, up above the threes, below the threes, and you can see on the chart, if you drew a circle around that area, you'd see that we're starting to really get a pattern going in the threes right now in vacancy rates. So I think we might see that get a little bit tougher for landlords and a bit easier for tenants, particularly at the top end, Liz, particularly at the top end.
Okay. I'd just like to ask both of you, I guess, with you seeing conditions being the best, you said, Tom, in 10 years, but we've got, of course, the RBA meeting coming up for August and a lot of speculation about whether we'll see an interest rate cut or not. I think the market's pricing in around about a 65% chance that there will be one. I'd like to get your views on what you think, if there will be one, and just how much of a benefit it'll have to the property market.
I think there will be one. I think there's going to be a rate cut in terms of what it's going to be for the market. Look, at the moment, there's so many buyers out there and not enough stock where I don't think it's actually going to help the situation of increasing the turnover. The profound numbers that Charles just went over, Liz, was that we have got an absolute shortage of listings, and that is what's causing price growth. Having a further cut in rate is probably going to get more people thinking I should be buying, which means that they're going to join the queue of people out there looking to buy, which is going to put pressure on prices unless we get the stock levels increasing. Spring is a time when stock levels increase, so that's when we have our Super Saturday in the auction areas. So we will see more stock come on. However, the issue that we're going to face is that you also see an increase of buyers come on to match that.
Right.
So it will be very interesting. I think that rate cut's going to put more pressure on buyers.
I'm in at 35% at this moment.
Are you?
Yeah,
You don't
I
think
think
so?
something will change and they'll pull back again. I'd like them to do it, but I think they'll pull back.
Will we see one before the end of the year, though?
I don't know. I'm not that confident, no.
Okay.
Yeah.
All right, we'll have to leave it there. But a big thank you to Charles Tarbey from Century 21, founder and chairman, and Tom Panos from News Limited for joining me this evening. It's
Thanks,
been a
Liz.
pleasure. And you will be pleased to know that Chris Gray will be back in the chair next week. So until then, thanks so much for your company.
The information featured in this